Thank you, thank you. Nice welcome. Morning, everyone. So I'm Marlon from 20Ci or MoverAlerts. If you're unfamiliar with who we are, we're essentially a data marketing agency or a lead generator, if you like. And essentially what we do is our focus or expertise is on home mover data. So our data has been shown in some quite broad tabloids, a lot of press, and you'll see in the next slide some of the kind of highlights of recent times or recent quarter as to what's been going on in the press. So it's not kind of a secret, excuse me, that biggest housing downturn, prices falling even further, prices keep falling, prices suffer sharpest fall in the last 14 years, predictions of a 35% fall by 2025, price plunge of 30%. Now they all sound great, but realistically, if they're all true, then we'll have to say goodbye to the property market, right? I'm sure we will have our own kind of theories and predictions on what's going on in the market, but if we really look into what's happening, we'll take a quick look at transactions, supply and demand, housing prices, falling throughs, time to sell, and time to exchange. Feel free to take pictures of any graphs or kind of data that you see on the screen. That's absolutely fine. So here's some facts. So transactions are 90% down on last year, but more importantly, they're 12% down on 2019, so our last sort of normal year, if you like, obviously pre-COVID. Now, considering the fact that we've got quite a lot going on in the press at the moment in terms of the war in Ukraine, the cost of living crisis, which is kind of really draining on the market, Liz Truss mini budget, interest rates and mortgage rates obviously through the roof, it's actually not too bad of an outcome. And the property market is quite resilient. So some facts in terms of transactions. If you have a quick look at the orange bar, you'll see that it's leveled off over the last couple of months. As I mentioned, take pictures if you need to. So looking at levels from September from this year down to 2019, it has leveled off, which essentially means that the market is resilient and hopefully it should continue to do exactly that. So supply and demand, supply being kind of instructions for sale and demand being properties listed as sale agreed. Supply in the last year has risen by 2%, although it's still lower than 2019 by 3%, and demand is 14.5% lower than it was last year. Realistically, next year will look much better, simply because the sale agreed has not fallen by as far. So prices, so going back to my first slide, you would have seen 30% decreases, 35% decreases, which obviously, if you look at the graph, isn't quite true. So towards the end of the graph, you'll see a slight dip, which is the mini budget by Liz Truss, and it's obviously spiked towards the end there. So essentially, as it's peaked, in September 2022, comparing to May 2023, it suggests a fall of 2.3%, and prices won't fall by double digits, but are likely to fall by single digits, but on the lower end, so maybe 2-3%. Realistically, though, it won't stay that way for very long. So according to the Centre of Cities, or for cities, the UK has a backlog of 4.3 million homes. Now, to do some quick maths, ultimately the plan was to build 1.5 million homes per year. If you divide 1.5 million homes by 5, it's 300,000 homes per year. Realistically, at the rate we're going at the moment, it will take us about 14 years to get through that backlog ultimately. So realistically, the house prices won't stay low for very long, they won't dip for very long. But the facts in terms of falling through rates, so falling through is probably one of the biggest frustrations for removers, just because you kind of are in contact with that particular customer for so long, and then there's a break in the chain or someone pulls out of the process, and it makes obviously your job quite difficult. Our suggestion though is to stay in touch with those people, just because only actually 8% of properties actually fall through, and a lot of properties that fall through actually do sell on that advertising cycle. So in October 2023, so last month, as of last month, the falling through rate was 25.4%. So actually 3/4 of transactions are actually going through, and it's only, as I mentioned, 8% of that 75% that are actually falling through. So as I said, if you are a remover or a storage company, do stay in touch with those customers, because the likelihood is that they will probably sell. It just might take a little longer. So time to sell, you'll be probably quite familiar with this. So 2019, which again is our last sort of normal year, it was 75 days. As of currently, it's 62 days, so just over 2 months. But we have to compare it naturally, as I mentioned, to our last normal year of 2019. But it does represent an increase on the prior year, so last year, of 46%, which is quite heavy, but only 17% compared to 2019. So much quicker than 2019, but hopefully it stays and reduces in time. So time to exchange, if you look at the graph on the right or the table on the right, you'll see the regions. And obviously, depending on where you are, will dictate kind of how long it takes to exchange. The average time to exchange at the moment, as of 2023, is 123 days, which, to be polite, is quite a long time. Ultimately, it is a reduction of 7% on the prior year, but again, naturally, we do have to compare it to our last normal year of 2019 of a 33% increase. In Scotland and Northern Ireland, these numbers do change, but ultimately, in my opinion, it is quite a long time between when your property is listed as sale agreed and actually exchanging. But what changed in 2023? So what's changed this year? So people in Inner London, the North East and Scotland, more likely to move. Those in the East Midlands, also less likely to move. And in terms of property types, usually those with flats, they're the ones that are more likely to move. And those at both ends of the spectrum, so at the high end and the low end in terms of price points, are also more likely to move or to sell. In terms of wealth, those again at the high end of the spectrum and low end of the spectrum are more likely to move. And in terms of composition, those who are single and kind of elderly or older are more likely to move, but those with younger families are less likely to move because obviously they're going to stay put for a longer period of time. In terms of agencies, estate agencies, so people are now less likely to use online merchants or online agencies to process their transaction, sell their home. There are a lot more independents, so we do encourage you to keep an eye on those local to wherever it is that you're based. But what it means to you essentially is just establishing really good relationships with those estate agencies so that you can be in the know of when kind of things are happening in your market, in your area. In terms of renters, I'm sure we all have an idea of what the state of the rental market looks like. Two main factors really. The first being the available properties to rent. People obviously are not necessarily scared, but hesitant to move because prices are very high, and obviously in general people want to stay put because of those reasons. In 2023, there were just over 250,000 properties to rent, which was 28% less than it was in 2019. And as you can see on the graph, it's just on a downward turn, and it'll probably be that way for some time. The second issue, as I mentioned earlier, is to do with affordability. The average cost of rent at the moment is just over £1,200 per month, which is pretty astronomical. If you pay your bills on top of that, pay your travel, your car insurance and whatever else, it doesn't leave you with much after your salary is paid, right? Now, renters are not always popular with removers, but we do advise that you kind of keep them close because they are becoming now like the owner-occupiers. They just don't have the big deposit. So hopefully that does change, but at the moment we're not seeing any kind of signs that that's going to get any better ultimately. Now, we don't like to predict. Our data does tell stories, but we do like to kind of share our data and what those stories tell. So we do have forecasts, and I'm happy to share. So what we're kind of likely to see, or what we expect to see in 2024, is a slight uptick, I would say, in supply, or new instructions, if you like. Ultimately, we want to see sort of modest growth in properties coming to the market. We're expecting that there'll be 1.58 million properties sold at the end of this year, with a growth of 2% to 1.61 next year. In terms of demand, so Bank of England are expected to, mid-year next year, expected to reduce interest rates. Whether or not that happens, who knows? But assuming that the consumer confidence is still there, then hopefully we can expect to see that start to happen. Volumes for 2023 expected to end at 1.03 million, with a growth of 6% to 1.09 million in 2024. Transactions and home movers. So we've been saying for a while now that we expect to see more than 1 million transactions processed this year. Now, given that the sales agreed volumes are what they are at the end there, the dip and then a spike where the red is, you can see that there's a 7.5% growth. We expect to see a 7.5% growth in volume of transactions next year, and hopefully that supports the sort of slow uptake in what we see in the market. And rentals, I mean, this isn't any dissimilar to what I mentioned earlier on, but essentially affordability and availability are obviously going to be issues, and we don't see any change in that in the next kind of coming years, especially next year. But however, renters will stay put for longer. I think the average is now like 5.2 years compared to what it was a couple of years ago. And there will be a massive increase in supply or reductions in demand. We expect to see a downturn of around 5% as of next year. So the future, or the forecast, we have seen a really resilient market or property market in 2023. As I mentioned in one of the first slides, we've had to kind of be subject to quite a few things going on in the property, in the property market. But the future is nowhere near as bad as the headlines say in the first slide. We do expect 1.1 million home movers and 1.07 rental movers in 2024. So do stay calm and don't sell your vans just yet. And that's all. So welcome any questions. If you want to come have a chat with us, we're at stand H1 by the entrance. But otherwise, that's me. But any questions at all?
Marlon, thank you very much. If you do have a question for Marlon, can I just ask you to wait for the mic? Because it's quite loud in here and nobody's going to hear you. Otherwise, I know this gentleman has, because I'm sorry to put you on the spot,
Yeah,
but you did just say to me. So come on, there you are. You can start us off.
Hi. On?
Yeah.
Yeah.
Did you say, what was the average length of time that people stay in a house for?
Rentals.
Was it rentals?
Rentals. I think it's about 5.2 years now.
Oh, okay. What about non-rental then? You know?
I wouldn't know in terms of sale sides, but rental side was around 5.2 years.
All right, thank you.
Okay.
That would be an interesting stat to find out, actually.
Any others?
Stat to find out.
Any others? Marlon, I just had one just while everybody's getting the grey matter going, because it takes a while this time of day. Good, I'll come to you in a sec. You said that the market was going to increase, I think, by about 2%, which was really quite a modest figure.
Yeah.
But then you were talking about the potential for lower interest rates.
Yeah.
And I wondered whether that prediction
Could change.
takes into account the fact that interest rates may fall, or is it assuming that they stay the same?
My guess would be that they're staying the same. Ultimately, we don't know what the Bank of England are going to do.
No, but so what I meant was, it's a prediction assuming that
Based
they
on
stay
that.
the same. So
I'm not
if they
actually
fall,
too sure, to be
that
fair.
could go better.
It's a good question. I'm not actually too sure, to be fair, but my guess would be that it wouldn't, just because we don't know what the Bank of England are going to do. So I think it would be, I don't think it would be correct to base it on what the Bank of England might do. We can only go on what our data tells us, essentially.
Okay, thank you. So.
Yeah, is that on? Can you hear me? Thank you, that was great. Lots of info. I guess from my perspective, I'm interested more, we're a regional operator rather than national. So what are the trends regionally? We're in the southeast, so we are seeing at the moment, if I look at the last couple of months, a lot of our clients selling and moving. You know, a £500,000 house in the southeast gets you a hell of a lot more bang for your buck, and they're downsizing as well. So you know, property prices vary massively across the country, so it's great to have those stats. Are we able to like break those down in a more, rather than a macro stat, a micro stat in terms of where the market's going to be at? So
what we're doing at the moment, we've got national stats, which is obviously what you saw, but we are trying to work on a way to make it more regional, so more regional to, or specific to your area. I'd say in terms of the price point you just gave, so I mentioned earlier on about the end of the spectrum, so ultimately the ones in the middle of the spectrum are going to kind of move slower, but the ones at the end of the spectrum, be it maybe sub 150 and maybe upwards of 2-3 million, are the ones that there'll be a bit more, there's maybe a bit more activity around those areas. But in terms of sort of regional stats, it's something we're definitely trying to work on.
Okay. Any more questions? No? Or are we going to have?
I've got you going, and I thought.
Or are we going to have an early bath? Everybody wants to get the tea room.
If you do have questions, or if you think of any later on, as I said, we're at H1 opposite the entrance. Come and find us. Happy to help. Cool.
Good. Thank you very much.
Thank you, guys.
Well done, Marlon. Thank you very much indeed. Thank you.